Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, one would have hoped that there would be some semblance of normalcy. We'll see some bit of buying, but that was not to be. In fact, it was turning out to be a manic Monday for us, given the fact that we came very close to violating that 25,000 level on the downside. 25,001, that was the intraday low on the Nifty, the recent swing low. I think that's one thing that analysts will be working with as a support level for the index now. And the resistance level has now moved to the earlier support level of 25,322. That was, the recent swing high of Friday or the last week sometime. So yes, that was the texture of the market, extremely weak, but we did claw back some of those losses and we managed to defend that 25,000 level on the downside. 25,082 is where we shut shop. The broader end of the markets were outperforming though. Small cap index up 1%. In terms of Sensex, it was down somewhere around 250 points. The bank Nifty as well managed to edge back into the green, marginally so, but still, at least it ended with a green tick. Advanced decline ratio almost 1:1, skewed in favor of laggards though, but nothing to worry about there. In terms of sectors, some of them were doing well today, Yatin, barring the IT pack. Of course, IT was a big laggard for last week, thanks to TCS numbers and recent bout of selling. We've seen IT take it on the chin. Today as well, we have HCL Tech numbers coming out soon, and ahead of that, all the IT names were under pressure, languishing. The IT index was down 1.5%. But other sectors that stood out were the likes of real estate. That index rather was up in excess of 1%. You have PSU Banks index doing well, Pharma doing well, even autos managed to end the day in the green. In terms of individual movers, then Eternal continues to do well. Titan, that was a big laggard last week, managed to do well in today's market. IndusInd Bank, ONGC, Adani Enterprises, some of the two-wheeler names were doing well. On the flip side, financial names were under pressure. Bajaj Twins, Jio Financial, and of course the tech names and Asian Paints as well. That has been a recent outperformer. That stock was under pressure. But Yatin, broader end of the markets continues to do, not continues, today did well, and a lot of movers there.
Yeah, so stock specific action continues. In fact, Nandita, despite the market weakness on Monday, we had the advanced decline ratio is almost 1:1. Most importantly, stocks like Ola Electric reacted to their Q1 numbers as well as the commentary for FY26, in which the management expects that the gross margins will double. They could see free cash flows probably at the fag end of this financial year. And more importantly, they are expecting no further provisioning of the guarantees, or the warranty periods which they have given almost to the tune of 250 crores per quarter for the last 2 quarters. So a lot of things could turn around for Ola Electric. Today post the conference call at 2 p.m., the shares hit almost a 20% upper circuit. So that stock ended almost 18-19% higher. Newland Laboratories, that stock moved 18%. JP Power continues to rally 16% higher for that stock. Anand Rathi post the quarterly numbers was up nearly 20%, ended the days at almost 14%. What is not doing well is GRSC. Defense stocks continue to witness profit taking, 5% down for GRSC. Kochi Shipyard down 2%. And the other stocks like Berger Paints and Techno Electric also witnessing profit taking.
But then let's talk about some triggers before we talk about stocks. Tariff wise, the flip-flop continues.
Correct.
Now we are listening to higher levels, 30%, 35%. Market was getting comfortable with 10%, although, global markets haven't really reacted that badly.
Yes.
Because Wall Street is still near record levels. And, European Union, Europe also doing okay, given the fact that they are, looking at thrashing a deal
or
before the
probably
August
looking
deadline.
at retaliatory tariffs against, Trump's threats.
And even this Jane Street issue, right? I mean, Moneycontrol, my colleague Brajesh was the first one to report this news that Jane Street has deposited the amount that SEBI had mandated it to deposit into the escrow account, 4,843.5 crore rupees. In fact, SEBI has further revealed that Jane Street has submitted a request seeking the removal of certain conditional restrictions imposed under the interim order. So
Correct.
This is also a developing story now. But what happens to volumes here on? Do you think that will come back to normal? It will be muted? Just how do you think this will bode for the capital markets?
So 2-3 things. First is SEBI is questioning a lot of hedge funds. There is an interim order on Jane Street, as we know. How does Jane Street resume? We don't know, because SEBI is still to take a decision, right? They informed it via the press release that they are still looking into the resumption of trade by Jane Street, because there have been asking to lift the restrictions post depositing the amount in escrow account. So that issue remains. Number two is volatility getting reduced. So, to the last 6-12 months, the volatility in the markets has reduced, which means that the option premiums are not that great versus what they were 12 months back. Probably because of lower retail participation, lower institutional participation, lower hedge fund, participation. So, that is one thing which will probably keep the volumes lower. And that is what we are seeing for the past 1 or 2 months, that volumes on both NSE and BSE in the option segment has reduced considerably.
Okay, this is one issue that has also kept capital market stocks under pressure, right? The likes of BSE. But on that note, let's take a look at some of the stocks that are on our radar. I mean, HCL Tech is one because it is expected to report numbers today. TCS kicked off for the first quarter earnings of FY26 on a very, very bleak note. CC revenues for TCS were down 3.5%. For HCL Tech as well, profit growth is expected to be muted. Deal TCV pipeline, these are some of the things to watch out for. Discretionary spending outlook in focus. Revenue guidance will also be watched out for. Although most of the analysts believe that revenue guidance of 2 to 5% will be maintained, but some analysts are expecting the lower end of the guidance to be raised to 3%. So that's something that Street will be watching out for. Also, it is a seasonally weak quarter for IT services and products business of HCL Tech. So that is something that one needs to keep in mind. Key to watch, other things that will be key to watch will be demand outlook for the engineering, research and development services, for business application, IMS and digital services in FY26 as well. In terms of the dollar revenue, according to the CNBC TV 18 poll, it is expected to edge higher by 0.9% on a quarter-on-quarter basis. But for constant currency revenue, it is expected to edge lower by over 1% on a quarter-on-quarter basis. EBIT margins are seen at 17.3% vis-a-vis 17.9%. That is a 60 basis point contraction. Profit is expected to edge lower by 3%. Aside of that, if you look at some of the other brokerage expectations, Phillip Capital expects profit to rise 1% on a quarter-on-quarter basis, and they are expecting the revenues also to rise by 0.8%. And if you look at Motilal Oswal, that brokerage has pointed out that BFSI, high tech, these are some of the segments that are expected to perform relatively better than the rest. Kotak is expecting healthy deal TCV in the range of $2 to $2.5 billion. And of course, demand wise, it will be weak in the wake of persistent tariff related uncertainty as well. In terms of what to watch out for, as I mentioned, the impact of reciprocal tariff imposed by US on manufacturing and retail segments, nature of deals that are in the pipeline and likely closure timelines, because delays have been flagged off by TCS as well. Discretionary spending and outlook on that, how are clients behaving on that front, and of course the pace of generative AI adoption, that's something that Street will be watching out for. Remember, the current FY26 guidance in terms of revenues 2 to 5%, and in terms of margins it's 18 to 19%. But here as well, I think in the absence of wage hikes, margins are likely to remain under pressure.
Correct. And yes, TCS also spoke about as to how uncertain times are, whether or not HCL, Infosys, all of these top tier companies in IT add on to this commentary, then probably the sector would be in trouble. So let's see how the management commentary is, particularly apart from the numbers. But what did well on management commentary is Ola Electric. The stock moved nearly 20% in trade, and as I mentioned, the guidance was quite strong for FY26. In fact, they believe that moving forward for FY26, free cash flows could come in. For FY26, the exit gross margins could be 35 to 40%, almost more than double to what they are currently in the first quarter as reported today. Also, if you look at the auto business, that should generate free cash flow by exit of 26. And also, more importantly, they have turned EBITDA positive for the auto business in the month of June itself. So yes, when it comes to guidance, they have met the guidance. Also, they do not expect any major one-time warranty provisions going forward. And that would add to overall profitability, because in the base quarters, you will probably have those provisioning impacts which will not come in the coming quarters. So yes, post the numbers, Ola Electric much awaited relief rally, because the stock was at all-time lows today morning, and from those all-time lows the shares have shown a reversal of nearly 20%. obviously still below that IPO price. I think 73, 75 was the IPO price.
76 was the IPO
76
price.
was the IPO price. So yes, still a long way to go when it comes to the IPO price getting back on the screen.
That's true, Yatin, but it does come as a relief to investors, right? Because the stock was languishing and now, of course, up 18-19%. And of course, the fact that on a quarter-on-quarter basis, the numbers have been fairly good.
Yes.
On a year-on-year basis, if you look at it, of course, revenues may have halved and profits, losses may have widened. But on a quarter-on-quarter basis, the company has done well. And of course, as the PLI benefits also kick in from the second quarter, it is expected to do well. Also, the fact that they have said that they are focusing on non-rare earth components as well, right? So that's something that EV sector has been, has been kind of feeling the pangs of, but that's another relief statement coming in from Ola Electric. But another stock that was in focus was VIP Industries, because the promoters are looking to sell stake, 32% stake to PE giants, Multiples PE and Mithun Sancheti. And the buyers will be launching an open offer for an additional 26% stake. The total consideration for the 32% stake would be somewhere around 1760 crore rupees. Yeah. The stake will be acquired at 388 rupees per share, which is at a 15% discount to Friday's close price. I think that's something that kind of spooked the stock a bit, but the promoter was on CNBC TV 18, the management was on CNBC TV 18 today, and they allayed quite a few concerns, which is why I think the stock recovered from the day's low and ended in the red in the green rather as well. The total deal size for a 58% stake in in total will be at 3,200 crore rupees. Now the management on CNBC TV 18 said that of course, VIP has been a leader when it comes to the luggage industry, and it has been a number 2 player. In fact, the number 2 player is Samsonite, which is not even 10%. Of the sales, right? They've said that they had a management crisis in the last few years because the younger generation was not interested in the management of the company. That is why they were looking at professionals to run the company going forward. And, they were looking to change the leadership and ownership structure as well. They were looking at PE players because of their expertise in creating value. And that, according to the management, is the best thing that has happened, that they have got a PE investor on board. The promoter will be holding on to 20% stake, and they say that the long-term story is extremely good going forward. He will not be, he's not going to be a part of the board, but he's been offered the position of chairman emeritus, and the company will be run by the PE firms, and they have the right to appoint one director, and he said that he'll likely appoint his wife as one of the directors. And there was a lot of concern when it comes to the downward spiral that the company has seen in recent times, and good management was the need of the hour for VIP to get its mojo back. And with this move, they are expecting the company to get back on the growth trajectory, and as he said, that the long-term future looks very promising. He's also pointed out that he'll still be designated as a promoter, but after 5 years he'll be required to bring down his stake to 8% from the current 20%. So I think that allayed fears on the street, and the stock did recover from lows. But if you look at the stock's performance, it has already come up, I think, 75% from its 52-week lows in the last 3 months. So yes, there you go. VIP ended higher by 5.5% after management came and allayed those concerns and said that the company remains on the growth path. In fact, this is the best thing that could have happened. And now that a PE investor will be running the company, value will be created going forward.
Absolutely. VIP Industries there on your screen, ending 6% higher at the day's high.
Well, yes, Yatin, it's going to be an earnings-heavy week. Now we are getting into the thick of things when it comes to earnings. We have Axis Bank, Reliance Industries, a lot of these heavyweights reporting numbers this week. Inflation numbers will be coming out in just some time from now. It had dipped below 3% last month for the first time in 6 years, I think, and now it is expected to dip further. So that's one thing. And even when it comes to the global landscape, apart from tariff, you watch out for US inflation figures and what the impact of tariff will be on those. That will be closely monitored this week. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and we'll see you tomorrow morning with the markets. Thank you for watching.